Hey, Rick.
Hey,
Oops.
how are you? Oh,
All right, we're going to go ahead and get started, everybody. I just want to thank you for hopping on today for the reverse mortgage training. I want to welcome you and also introduce you to today's presenter, Rick Rodriguez. Rick is the National Director of the Reverse Mortgage Division here at VIP Mortgage Inc. Rick's been specializing in reverse mortgages since 2005, and he's consulted with thousands of homeowners, real estate agents, financial advisors, and other professionals regarding the important role that housing wealth can play in retirement planning. In his role here at VIP Mortgage, Rick has helped lead the company's reverse mortgage division and currently is working with teams across the country to support education and collaboration with real estate professionals, financial advisors, and other industry partners. We hope you enjoy today's session, and with that, here is Rick.
thank you, Wendy, and good morning, everyone. And thank you for taking the time today to join us. As Wendy said, my name is Rick Rodriguez. I'm the National Director here at the Reverse Mortgage Division of VIP Mortgage.
Rick, can
Our
I,
division
Rick,
focuses.
Rick, I'm going to interrupt you already. A couple people are saying they can't see the screen. Can we go ahead and double check that?
Oh, let's double check that. Let's make sure. How does it
Can
how does it look?
can you all raise your hand if you're able to see the screen? And let's see if it's a global issue. Okay, I'm seeing a bunch of people that are raising saying they are able to see it okay.
Okay.
We've Yep. Okay. It looks like most everyone is raising their hands saying that they're able to see it. There
Okay.
it goes. Okay. It looks okay. Looks like we are good
Okay.
now. All right, we are ready
Great.
to go.
Great. All right. Well, hopefully everyone can see us. Um, Wanted to let you know that our division here at VIP Mortgage focuses exclusively on reverse mortgage education and strategies as it relates to you, the real estate professionals, and how you can better serve the age restricted or the 55 plus market. So, in today's session, this is really designed to be practical and business focused. If you haven't heard, baby boomers represent the largest segment of home sellers, and they are a dominant force in today's buying market. Yet many agents are not fully leveraging one of the most powerful tools available for serving these clients. The HECM for purchase, which is what we're going to talk about today, also known as the reverse mortgage for purchase. This is not going to be a technical mortgage class. I really want this to be more of a strategy session, something that can be practical for your business and get your mind thinking on how this tool, this product could potentially help you in your business. Over the next hour, we're going to walk through how reverse mortgages work, the qualifications, and why they are often easier than many expect, how to structure purchase transactions with no required monthly mortgage payments, and how you can position yourself as a knowledgeable and specialized agent in the age restricted market. By the end of the session, you're going to understand how to identify opportunities, structure conversations with confidence, and determine when this strategy can help your clients and grow your business. Let's get started. As Wendy mentioned, we're VIP Mortgage. We're a nationwide lender founded in 2006. We're licensed in 47 states at the moment. We're a full service residential mortgage lender. We do a lot of volume here. And one of the things that makes us unique over many other mortgage lenders throughout the country is that we have a dedicated reverse mortgage division. I always like to start to take your pulse, get an idea. You agents out there, I'm going to put you on the spot, and you can put this in the chat. As a real estate professional, I'd like to know how many of you, A, always talk to your senior clients about reverse mortgages? If that's you, please put A in the chat. B, only once in a while when I see there might be a need, or C, and don't feel bad if it's never. This is what we've come to find out is that a lot of agents say, hey, I don't really know what this has to do with my business. I thought that's more of like a refinance tool. So if that's you, that's no problem. We're hoping that this session here today is going to hopefully get you more into this A, B category so you can see the opportunities that could present themselves. So put that in the chat. We'll go over that towards the end of the session here. All right. What many real estate agents don't realize is that reverse mortgages are not just for staying in the home. It can help people buy a home. And that's the reverse mortgage for purchase, which a lot of homeowners don't know. A lot of agents don't know about this. And this is one of the reasons that we do the education that we do here at VIP. With this product, we know that it can also help create listings because now homeowners see the value on the buy side to give them the motivation to create the listing on the sale side. A big part of this product too is that it's helping homeowners preserve their retirement assets. I don't know if you've been keeping up with what's happening in retirement, but there is a lot of Americans who are house rich and cash poor and are trying to find ways on how they can increase their retirement savings. And what this product can also do is, of course, open up some new buyer paths. And we're going to get into some case studies, some strategies later so you can see how this can be used in a variety of different ways. Why this matters to you? Well, you heard about baby boomers, right? I'm sure. This is the boomer opportunity. And right now, baby boomers, they're the largest force in today's housing market. They comprise the largest, one of the largest segments of buyers and the largest segment of sellers. So they are a force in the real estate market. And baby boomers, they're typically equity rich clients. You know, they've had multiple houses in their lifetime. They've rolled housing wealth into houses. So at this point in their life, a lot of them even have their houses paid off. And what this product can help them do is increase their purchasing power. Take whatever cash they have today that they're willing to place towards real estate and stretch that out further to potentially help them buy more property and or preserve more assets for retirement. And really the goal here is we want to get more closings for you. Agents who understand this strategy typically are going to stand out as a specialist in the market and help win more referrals, more clients. And you know, where are you going to find these deals? Of course, age-restricted communities. If you're not familiar, there is a site, 55places.com. It's a national database that will show you any age-restricted community throughout America. Relocation markets, of course, we know that's a big part. Downsizers has always been one of the main characteristics of retirees when they're looking at real estate. And of course, cash buyers. Because of this abundance of housing wealth, a lot of retirees end up paying cash for a home, which sounds great, but we're going to challenge that a little bit later on why maybe that might not be the best fit for every retiree. So who are these baby boomers, right? Well, they're booming. 10,000 people in America are turning 62 every day. Why 62? Well, we're going to learn a little bit that 62 is the magic number for the most common reverse mortgage product. And what's happening with a lot of these baby boomers, well, unfortunately, as I mentioned earlier, a lot of them don't have many retirement assets. In fact, there's fewer pensions and defined benefit plans than in years back. We've seen for them, unfortunately, some of the lowest return on investments in decades, which for a retiree, that could be catastrophic. Research at Boston College some years back showed that 76% of baby boomers plan to delay retirement. Why? Well, because they don't have enough money to retire, so they got to keep working. And not to be more depressing, but unfortunately, long-term care insurance is a big issue in our country, and less than 7% of us have it, but 70% of us are going to need it one day. So that's a big hot topic that we've got to figure out here. The good news, the bright spot, is that we're living longer. That's great, but we got to have money to sustain that life. And the bright spot is that the majority of baby boomers have equity in their home. The latest stat shows that right now, homeowners age 62 or older in America have over $14 trillion in housing wealth, home equity, the largest underutilized asset in America for this demographic. So a lot of agents may think, well, once you get into retirement, you kind of slow down with real estate. You're not really looking to move anymore. But to the contrary, right now, baby boomers make up 53% of home sellers and 42% of home buyers. So they're definitely on the move. Often, many of them have put money aside, whether it's in retirement savings or other types of retirement accounts. And they also have home equity. So they have the ability to move a little bit more freely than other demographics, also for the purpose that, or the point that many of them aren't working. So they have that freedom to be able to move a little bit more freely than some of our other demographics. And what are some of the reasons that retirees move? Well, the number one reason is they want to be closer to family. And it's no longer the kids, guys. It's the grandkids, right? You hear it all the time. Why are we moving? Well, I've got a new granddaughter in Arizona, so I want to be closer to her. That's something to really understand, because this is where now we get into the emotional side of understanding why people do what they do. And when it comes to buying real estate for people of this age, this is something that we need to understand to help best educate and also best direct sellers and buyers alike. So wanting to move closer to family. Also, of course, right now with everything that's going on with inflation, our economy, many of them want to reduce home expenses. They've got money trapped in the house. They're looking at downsizing, how they can cut expenses here or there and tap into some of that equity that they have. Change in health status, change in marital status, empty nesting. Houses are too big, which there's a great marketing idea there too, is looking at areas where people of age have been living in houses for so many years that now those houses have gotten too big for them. It's just maybe a husband and a wife, the kids are gone, they're out to college, and they got this 5-bedroom, 3,500 square foot home with a pool that is maybe not the best function for them at this point in their life. And also, one of the other big reasons that retirees move is getting the cash out from the sale of their prior home. Again, the housing wealth that's been trapped in the property. There's a lot of misconceptions about reverse mortgages. These are four of the top misconceptions. And this is something that, as an agent, you have to understand, because if this is something that you're going to talk about or have your clients look into, you yourself also have to believe in this. You've got to believe in, is the reverse mortgage a good product? And the biggest misconception that agents have is that the bank takes the house, the bank takes title to the house, and ownership is given up. And that is false. And that has been false since 1989. That's when the Federal Housing Administration started insuring what were then private reverse mortgages, which did take title to the house. So it hasn't been that way for nearly, 36 years now. But there's still a lot of belief that the bank is going to own the house. This is just a mortgage lien. Just like any other mortgage lien, it's recorded against the property as such. Title rights remain with the homeowner. And if the homeowner has, for example, a living trust, upon their death, the title right, the house that is, will go to their beneficiaries. The reverse mortgage does not get in the way of title rights. It is a lien that is due like any other mortgage lien. But this is the biggest barrier why a lot of consumers and also real estate agents alike don't look into the product. Secondly is, a lot of people think, well, those are just too expensive. Unless you're really down and out, then maybe look into that. What most are referring to is the upfront initial costs of putting a reverse mortgage together. And yes, the closing costs of a reverse mortgage are more expensive typically than any other mortgage in America. There's a reason for that. With the most common reverse mortgage, which is the FHA reverse mortgage, as part of the initial closing cost, there is a 2% of appraised value or purchase price, whichever is lower, that is charged to FHA for the insurance. So that's 2%. You got a property, 600,000, 2%, 12,000. Just for the mortgage insurance, the FHA insurance. That's part of your initial closing costs. Then, of course, you have all your other standard costs, which are in line with any other mortgage product. But it's this one line item that sets it apart. But it's also this one line item, this insurance, that we're going to learn through this course here, that provides the protections and benefits that this product has over any other mortgage product. So yes, there's a cost, but certainly there is value that the insurance is providing the homeowner, protections for the homeowner that we'll learn about. Third, a lot of people think, well, geez, if you got a reverse mortgage, you must not love your kids. You're going to leave them with no house, leave them with a big bill, and that's also false. Again, we learned about title. Title remains with the homeowner. Title can be transferred to the beneficiaries. And also, the reverse mortgage insurance protects the kids that in the event, if the mortgage ever exceeded the value of the house, and it was quote unquote upside down, that insurance takes care of any shortage 100% without any recourse to any other collateral. In other words, if the house can't satisfy what is owed on the reverse mortgage, the insurance will take care of that 100% without incorporating any other assets. So a homeowner can never leave a bill behind to a child. And fourthly, there are too risky and dangerous. Well, if the insurance wasn't there, I probably wouldn't be standing in front of you today, because this product would work completely different. It would work like the old reverse mortgages prior to 1989, where the bank did take title to the home, and the bank also shared on the ongoing appreciation of the home. That was deemed risky, because if the homeowner owed more than what the house was worth, they were on the hook for that. So with the insurance of the reverse mortgages today, that eliminates the risk and danger of those old reverse mortgages. So what about the basics? Well, we're going to focus on the most common reverse mortgage product. This is the one that has been in place since 1989. This is the FHA insured reverse mortgage, technically called a home equity conversion mortgage. And that acronym, HECM, is pronounced HECM. So this is the reverse mortgage product that you see on TV, you see announced in different media outlets. This is the most common one. We're also going to talk in a little bit about private, proprietary reverse mortgages, which are starting to get more popular in recent years. But this is the most common one. And for this product, you have to be at least 62 years age or older. Okay, now we'll talk about in the footnote there's an eligible non-borrowing spouse protection. What that means is if you are married and one of you is at least 62, but the other is under 62, you could still qualify for a HECM where both spouses are protected. The younger spouse is considered an eligible non-borrowing spouse, but is protected under the reverse mortgage. That was one of the big changes that took place about 10 years ago to strengthen the product. This product, as I mentioned, is an FHA product, so the home must pass an FHA inspection. So keep that in mind. Same as other types of FHA loans that you've done in terms of how the appraiser's going to appraise the property per FHA. Similar here. These reverse mortgages, any reverse mortgage that's available in America today, whether it's the HECM or any other private reverse mortgage, are all based on primary residence. So that's an important caveat. Primary residence when you go to apply, and also you have to maintain that primary residence requirement for as long as you want the reverse mortgage in place. Loan amounts on the HECM product right now, and of course, depending on the market, depending on interest rates, but right now it's anywhere between 40 to 70% of appraised value. And we're going to learn a little bit more about the factors, but that's based also on age and, of course, as I mentioned, current interest rates. One of the protections of the reverse mortgage, any reverse mortgage offer today, is that the applicants must go through counseling. This is a good step. It's a third party agencies throughout the country that are licensed by HUD to offer reverse mortgage counseling to the consumer. They want to make sure, number one, they understand what a reverse mortgage is. And number two, the product wants to make sure that people who are entering into reverse mortgages are of right mind and they are mentally competent. So the benefits of the HECM, well, I can't stress it enough. Number one is you keep title to your home. Remember, this is the biggest misconception that people have about the product. They don't think that they own the house, and that is false. So you keep title to your home. Basic credit and income qualifications. Perhaps one of the easiest, if not the easiest mortgage in America to qualify. Once you have the age and you have the equity, there is no minimum FICO score with the reverse mortgage. And the income, we don't even really use language like debt to income. We have our own language, which is called residual income. And the bar is much, much lower for qualifying when it comes to income. 95% of our clients typically qualify with just Social Security income alone. So much easier than any other product. As I mentioned, there's the insurance protection on both the FHA product as well as the private reverse mortgages. They have their own private insurance. And it's what makes this loan what's called a non-recourse loan, which basically means that the only recourse the lender has to get paid in full is the house. And the house is the only collateral, period. If the house is unable to satisfy the balance that's due when the repayment term comes up, the insurance takes care of that deficiency 100%. And of course, the big benefit of a reverse mortgage is that mortgage payments are not required. They're optional. So think of it as an optional mortgage payment program. If you want to make payments, you can. In fact, a lot of people don't even realize that. They just think that there is no payment ability or no payment required, but you actually can make a payment if you want to. Now, most people elect not to make a payment for many reasons, which we'll get into a little bit later, but it is an optional payment mortgage, which is probably one of the easiest ways to explain to someone what is a reverse mortgage. Well, it's simply an optional payment mortgage. You decide if you want to make a payment or not. Now, that's the mortgage side, but the homeowner is still responsible for paying maintenance dues, property taxes, and homeowner's insurance as long as they occupy the home. What kind of properties can you put a reverse mortgage on? Pretty much any kind of property. 1 to 4 units, manufactured homes follow the same kind of FHA protocol in terms of the characteristics of the manufactured home. Condos must be FHA approved, or we have to try to obtain FHA approval, which we have a dedicated condo department here at VIP that can help you and your clients try to get condos approved for FHA. PUDs, townhomes, and properties in a living trust. Right now, the HECM reverse mortgage, because it's an FHA product, like you're familiar with other FHA products, it has lending limits. Ours is different, though, than traditional FHA loans. The current national lending limit for the HECM reverse mortgage is $1,249,125. That means that a lender can lend up to a percentage of that home value. If the home values in excess of 1.25 million, then that's where we can turn to the jumbo reverse mortgage or the proprietary reverse mortgage, which we'll talk a little bit more later. Okay, so how can you extract this housing wealth, this home equity via reverse mortgage? Well, there's 3 ways. You can do a lump sum, cash out, whether it's to refinance an existing home or a lump sum to help you buy your next home. You can do a line of credit, which is kind of like a HELOC, and I'm going to dive into here in a moment. And what many people know too is that you can collect a monthly payment. This would be for someone who's living in their existing home. They want to use a reverse mortgage to refinance, and they want to get a monthly payment stream for so many years, or perhaps for the rest of their life. So these are the three ways that a reverse mortgage provides funding. Now, the line of credit, I'm going to just talk about this for maybe 2 minutes, but I could probably teach a whole class on this because this is what I call the secret weapon of the reverse mortgage. And this is what 10 out of 10 people don't know about a reverse mortgage. So think of a HELOC. It's one of your three options on how you can extract equity from your home, but it's a growing line of credit. That's right, a growing line of credit. And so in this example, you have a 62-year-old client has a home worth $700,000. Based on their age and current interest rates, they qualify for a reverse mortgage loan of $234,775. They don't need any money today, so they're going to put all that money in a line of credit. The only thing they owe to start with is the cost of setting up the reverse mortgage. And the costs were $23,000, right? It's not cheap, but why is that? Of course, it's that insurance, which was about $14,000 of the 23, right? So at day one, they owe 23, and they have in this line of credit available $234,775. Now, a couple of things that make a reverse mortgage line of credit different than a HELOC. Yes, a HELOC is cheaper, and if a HELOC works for someone, then great, that might be a way to go. Certainly, the reverse mortgage is more expensive, but where it's superior to a HELOC is number one, of course, there's no payments. Once you start drawing from the reverse mortgage line of credit, again, this is an optional payment mortgage where no payments are required for as long as you live in the home. So that's an advantage. Secondly, is that unlike HELOCs, a reverse mortgage line of credit can never be reduced or taken away, period. Why is that? Well, it's that costly insurance. This is one of the value adds, one of the benefits to the homeowner is that insurance assures the homeowner that no matter what's in the line of credit, that amount can never be reduced or taken away as long as they're meeting the terms of the loan, which is living in your home as your primary residence, paying your taxes, paying your insurance. But if the market collapses, if their home starts decreasing in value, not only will the line of credit remain intact open, but it will continue to grow. And the line of credit grows at the exact same interest rate as the mortgage, the debt side, what you owe. So in this example, this person at age 89, when now they might need the line of credit, that line of credit has now grown from 234,000 to 1,263,000, giving this person now additional funds to use deeper in retirement for whatever they might need, right? Again, very powerful aspect of reverse mortgage. We don't have time today to do a full deep dive, but I wanted to at least let you know because this is one of the things that really gives people confidence talking about this product and their belief in this product and what this can do for homeowners. And this has gotten a lot of talk in the retirement planning community. There's a lot of great research articles that have been written by not people in our industry, but very prominent retirement researchers, financial planners, CPAs about how this tool right here can be effective in retirement income planning. Now, when does the reverse mortgage have to be repaid? Well, it does not have to be repaid until the last living borrower permanently leaves the home. What does that look like? Well, certainly upon death. So if you have two parties, say a husband and wife, husband passes away, the reverse mortgage keeps working for the wife. No changes, no hiccups whatsoever. When the wife passes away, now that's when the reverse mortgage is due in full. And reverse mortgages are not assumable. So the lien itself cannot be taken on by anyone else. It's only for the borrower. So now it's due. Another way that, of course, the loan has to be repaid is when you sell a property. Just like any property that has a mortgage on it, when you go to sell it, then the reverse mortgage would be paid in full from the proceeds, and then the remaining equity goes to the seller. The reverse mortgage heirs as a footnote here in the bottom, will have 6 months to repay the balance. So think of it, husband, wife pass away, their son, who's a beneficiary, steps up to demonstrate that they are now the title holder. Hopefully there was a living trust in place that clearly identifies that. So now the son has title to the home. There's this reverse mortgage lien. Son's not sure what he wants to do with the house yet. No problem. He lets customer service know, I need some time. They give him 6 months. During that time, the loan is still accruing. If no payments are being made, there's interest that's being applied on the loan. If he needs additional time, he can also request two 90-day extensions, equaling up to 1 year. That is the rule of thumb in the industry, is that with asking for extensions, a beneficiary can have up to 1 year to satisfy the lien. Now, if the home is upside down, here's where the insurance also provides benefit, in this case to the beneficiary. So if the home is upside down, number one, the beneficiary can simply just walk away if he doesn't want to deal with selling the property. But if he wants to retain the property, well, then he can buy the home for not what his parents' reverse mortgage loan balance is, but he can buy the home for 95% of current market value of the house at that time. And the remaining deficiency, yes, that's made up by the insurance. So that's a protective clause just for the beneficiaries to give them the ability to retain the property if they desire. Proprietary reverse mortgages, other word for private reverse mortgages. So we're going to just touch on this here quickly. This is becoming more and more popular. Private reverse mortgages came about some years back to fill some voids that the FHA product couldn't fill. Number one was the lending limits. So they came out with jumbo reverse mortgages. That was really the first advantage of the proprietary product. Presently, on the private reverse mortgages, we can lend up to $4 million and take home values into account of $9 million. So these are for luxury homes, jumbo type properties is where this product can come into play. Also, this product lowered the age requirement. So you only have to be 55 years or older to qualify for a proprietary reverse mortgage. And it's very similar to the HECM, the way the guidelines, the structure, very similar to what we've already discussed about the HECM product. The variances are going to be, of course, in the loan limits, the home value we can take into account, and then, of course, interest rate charges. That's where you're going to see the differences between the two products for the most part. We also, just at the beginning of this year, have now a second mortgage reverse mortgage. This is brand new. We never had this option before. So now this part of the industry, the proprietary side, introduced a second mortgage to give people the ability to hold on to their first lien mortgages, where many of them might have those post-pandemic rates at 3%, and they don't want to let them go, but they like to tap into some of their equity and not have to make payments. Well, this is where a second mortgage, reverse mortgage, can come into play. So start talking about, how can this work for you? How can this help you close more deals? Well, number one, what we're seeing is that this is helping convert sellers into buyers. Why? Well, a lot of sellers are sitting on the fence. They look at their equity position and they're wondering, well, where are we going to go with this equity? We're in retirement. Many of them don't want to take on a traditional mortgage, so they want to pay cash, but that cash isn't enough to buy them the home they desire. So they remain idle. But once they learn about the reverse mortgage for purchase option, this can help motivate many of them because they see how they can increase their purchasing power through the product, which we're going to go through some scenarios here in a bit. Secondly, obviously helping boomers afford better homes. You know, in some cases, not just boomers, but buyers alike will resort themselves to a certain type of product or price point because they don't want to stretch themselves too much, or it's just all the cash they have to work with. But with this product, with how you can leverage the program to increase your purchasing power, this can help many buyers afford that home that they maybe truly desire, to again help motivate them to get into the buying game. Turning buyers into stronger buyers as well. A reverse mortgage for purchase is the second best thing to a cash purchase. You got a large down payment, which we're going to learn here in a moment. Qualifying is much, much easier. So from a strong position standpoint, this can help position your buyers to look even stronger on paper. Winning more deals in the 55 plus community. Again, I mentioned about 55places.com. If I'm an agent and I want to work more with this demographic, well, I've got to learn about the communities that align with this demographic. And 55places.com is a place that you should certainly check out and get familiarized with the different communities that are out there. And really what this can help you do is differentiate yourself. You know, we all need to have something that makes us stand apart in this big world of having thousands of real estate agents and mortgage loan officers, right? And this certainly can be a way to differentiate yourself when you're more familiar about this product. I mean, similar to agents who work with first-time homebuyers. I mean, of course, you're not the lending expert, but you know enough about first-time homebuyer programs to start a conversation and maybe direct your prospect to a lender to discuss that. This is no different. If you're working with the 55 plus community, you should know about this product enough to help give them some information and point them in the right direction. So what are you looking for when we're talking about a reverse mortgage for purchase? So number one, of course, is age. For the HECM product, you have to be 62 or older. And for the proprietary product, you have to be 55 or older. Secondly, you're looking at individuals who have either significant home equity at the moment or they have a large amount of cash to put as a down payment. Thirdly, individuals who are planning to downsize, relocate, or they're looking for one of these 55 place communities. And those individuals who not only want to buy a home, but they're also cognizant about preserving retirement savings and making sure that they have enough money in their nest egg to hopefully last them the rest of their life. So this is to give you a rough idea of how much someone can qualify for using a reverse mortgage for purchase. Now, these percentages change as interest rates change, okay? But to give you an idea how age plays a factor. Right now, if you have a client age 62, based on current market conditions, they would be required to make a one-time payment of 62% down to purchase that new home. Client who's 72 would have to put 57% down, and someone who's 82 would be required to put 47% down. So you can see how age plays a factor. The other factor is interest rates. As interest rates rise, those percentages rise with them. And as interest rates come down, those percentages come down. Just a few years back, in the interest rate environment that we were in, a 62-year-old had to put a 50% down payment. And that was kind of our walking around number for several years. We would tell agents that on the low end, your client has to put about 50% down. You can see the increase where we're at today, and that's due to interest rates. The other factor, of course, that you have to take into account is this is a percentage of your purchase price or appraised value, whichever's lower. Okay. Now, what are some guidelines on the HECM for purchase? Some things you should know. Seller concessions are allowed up to 6% of sales price. And these can come in the form of realtor credits, builder credits, and seller credits. At the moment, the only one who can't give a credit is the lender. That's not allowed by the product. Also not allowed are repair allowances. Home inspections. If home inspections are part of the transaction, which most of they are, many times a home inspection can be requested by the underwriter. So we want to make sure we're looking at and communicating with your reverse mortgage specialist about any types of items that could fall under FHA's conditions, guidelines for safety and hazard requirements or concerns. And on your purchase contract, and I know we have people from all over the country where you might have different looking purchase contracts, but wherever you indicate the type of financing, what we recommend is that you check other, because most purchase contracts, unfortunately, don't have a slot for reverse mortgages. So you want to make sure you check other, and if it's an FHA reverse mortgage, you must put FHA reverse mortgage. If it's a conventional proprietary reverse mortgage, you would just put other reverse mortgage. So think about your clients. Who could this work for? Well, the downsizer, certainly. And that's a big motivator in retirement. Retirees are looking to downsize. They're looking to sell a larger home because they, as I mentioned earlier, maybe it's now too big, too many square feet, too many bedrooms. They want to lower their expenses, utility expenses, pool expense, property taxes. And many of them also are moving because of lifestyle. I keep mentioning the 55 plus markets. Many of them want to go to areas, communities where there's like-minded people, there's clubhouses, pickleball, swimming pools, you name it. Then also, of course, think of the upsizer. Those who want to get into maybe their desired home, their dream home, if you will. Those who are maybe not satisfied with what they're being shown right now in the market based on just their cash availability. And this product can help them get into a different tier of houses, a different price point, increasing that price point, in other words. And then, of course, the cash buyer. And this is the big one because a lot of times, as agents, this is a pretty easy transaction. Cash buyer, no problem. But there's also value in what the reverse mortgage could do for the cash buyer. And we're going to go through an example here in a moment, but simply helping them to preserve more of their cash in their retirement savings using this product and making that one-time down payment, then putting 100% of their cash back in the dirt where it's now illiquid and it's not usable. And if this is going to be the house that they're going to live in long term, that might not work so well for some people. So certainly this gives them a little bit more flexibility and allows them to have more liquidity in retirement. So let's take an example of a downsizing. Here's Cindy. So Cindy is 70. She's going to sell her current home. It's free and clear. And her motivation, number one, is she wants to be closer to the grandkids. So in the interview discovery process, we learned and we notated. Very important. This is why Cindy's doing this. She wants to be closer to family. Also, Cindy wants to use some of the proceeds from the sale of her current home to help her grandkids pay for college and set up an annuity. So Cindy's house on the left, worth $700,000 free and clear. And she's looking at the house on the right, worth $675,000, closer to her family. Now, if she did a cash purchase, she would buy that home outright, have no mortgage payments, and she would walk away with about $25,000 thereabouts to give to her grandkids for the college fund. Today's college expenses, that might not buy much time, maybe a year of college. So Cindy was approached with another idea. Well, did you know that on the buy side, Cindy, you at your age have another option, and that's a reverse mortgage for purchase. In this structure, Cindy can buy that same house of $675,000, and at her age and current interest rates, she would make a one-time payment of $390,000. That means that from the net gain of the sales home, she walks away with $310,000 in her pocket after she makes the down payment for the new home. So instead of having $25,000 on a cash purchase, she now has $310,000 that she can utilize for not only her grandkids' college fund, but also there might be money left over for her own retirement. The reverse mortgage puts in the difference, in which now it's an optional payment mortgage. And if Cindy doesn't want to make a payment for the rest of her life, she doesn't have to make a payment. And when the day that Cindy is no longer living in that property, whatever's owed on the reverse mortgage gets paid from the sale, and the remaining equity goes to her kids. So that's a downsizing situation. What about upsizing? James and Mary. And I think there's a lot of James and Marys out there. And unfortunately, we don't get to talk to all of them. Why is that? Because James and Mary and many consumers already have enough tools to their disposal that they know what's going on in the market. They know what's going on with their own equity position. So James and Mary know that they have about $600,000 in equity in their current home. And surely they like to move to a new, in this case, a new construction community in an area that they like. But that new construction home is going for $1 million. This is their dream home, their last stop where they want to live the rest of their life. But looking at their cash position, Mary and James don't pick up the phone and call you or us because they don't think that there's a way. They see there's $600,000 equity. There's no way that they can pay cash, and they don't want to take on a mortgage for the next 30 years based on their income and what mortgage payments are going to look like on a conventional mortgage. So they stay idle until a real estate agent tells them, hey, did you know you've got another option? And that is a reverse mortgage for purchase. So at their age, James and Mary, they could take their entire $600,000 equity and they can roll that into the next house. And that $1 million property at their age requires their one-time down payment of $600,000, 60% at their age. So now James and Mary see how they can do this. And now you've got two transactions because now this just motivated them to list their home to sell because now they see how they can get to the buy side with this product. They make their one-time payment. The reverse mortgage finances the difference of $400,000, and they've got their new home where otherwise James and Mary, like many other Americans right now, are probably just sitting idle and either A, may never move, or B, are going to continue waiting until someone approaches them with an idea, something like this. So what we're trying to get you to see is that boomers have three options. We know the first two options have always been out there, which is conventional mortgage. Say you put 20% down, you have a mortgage payment for the next 30 years. Cash purchase, which is always been one of the more popular options for people in retirement. Why? Because they don't want to have a mortgage payment deep in retirement. As income dwindles, as retirement savings dwindles, for many of them, it's not a secure proposition to do a traditional mortgage. So therefore they do a cash purchase. And in this scenario, Deborah is looking at just that. Deborah's a single person looking at a home of $600,000. She's presented with the first option. She could put 20% down. That part's attractive. She's only got to put $120,000 down. But over the next 30 years, she's got a mortgage, just principal and interest payment of $2,955, which for Deborah, who's living on Social Security, this might be her entire Social Security or a large part of it. So not only is Deborah going to have, or that's not attractive to her, but she might not even qualify for that on her own, right? And if there was a Deborah and John, maybe they do qualify, but here's the part too, is that payment's going to take a large amount of their income every month. And then the other part that we don't like to think about but happens is that when there's two parties, two spouses, typically one spouse passes before the other. And what happens? Well, now the household income is reduced by 50%. And now Deborah, later in retirement, deeper in retirement, is now trying to scramble to figure out how she's going to make a mortgage payment. So for many retirees, they go with option number two, cash purchase, $600,000. I don't have to worry about a mortgage payment for the rest of my life, which that makes a lot of sense, not having a mortgage payment. But putting all the money in the ground now, for those who are going to be in that house long term, how do they ever use that for their retirement? And many people pass away with free and clear properties. Now, if that's their objective is to leave a free and clear property to their beneficiaries, then great. Then cash purchase makes sense. But for a lot of Americans, that's not their main objective. That's part of their wealth, their retirement savings is home equity, housing wealth. So they want to be able to still use that, find ways to utilize it. And that's what the reverse mortgage for purchase, one of the reasons it was created, is to give a hybrid of these two options, not having to put as much money down like a cash purchase and not being required to make payments like on a traditional mortgage. So in this case, Deborah, to buy that $600,000 home with a reverse mortgage at her age, she would need to make a payment of $378,000. The reverse mortgage finances the difference of $222,000. And again, if she wants to make payments, she can. And she can make payments for whatever she like, whenever she like, because there is no required payment. But if she doesn't want to make a payment, then she can save all that additional money that she saved from the down payment, plus her income that she would have been making payments. She can save all that money and just put it into her retirement account. Hopefully, Deborah's got a financial planner and she could say, look at all this additional money that I have. What can we do to make this work for my retirement? So, how we support our agents here at VIP? Well, number one, we do things like this: education, webinars, seminars, and consultations. We have specialized reverse mortgage specialists here that this is all we do. So we're able to consult with your clients. From a marketing standpoint, we've got plenty of materials and content that you can utilize on your different platforms, even co-brand with some of us for open houses. I mentioned we do webinars, seminars. We can even do joint webinar seminars with you. If you want to get us with you in front of an audience or even a Zoom, we can do that. Certainly, we're here to review scenarios with you. If you've got a couple prospects, or maybe you look in your database and you see some retirees, some boomers that you weren't able to find them a home some years back, or help them, motivate them to sell their home, this could be a reason to revisit some of those leads and get with one of our specialists to do a scenario review. Because we have a dedicated reverse mortgage division, we have dedicated reverse mortgage processors, underwriters, and support staff. So unlike horror stories that I've heard other places where it takes a long time to process and underwrite and fund a reverse mortgage, we're what's known a closed loan seller here at VIP Mortgage. We underwrite our own loans, we close our own loans, and our turn times are quick. Purchase transactions, we typically get those done somewhere between 25 and 30 days, like any other type of purchase transaction. We've got agent guides too for you as well. Make sure you request a free agent guide. We've got flip books electronically that we can send you today. In the chat, if you're interested in getting one of these agent guides, put in there, yes, I'd like an agent guide. Or reach out to your VIP reverse mortgage or forward loan officer who invited you here today and let them know that you'd like to get one of our free agent guides. With that, we also have consumer guides in print and flip books. These are great ways to start conversations. These are great pieces that you can have in open houses. So if you're interested in getting those types of polished materials, again, let us know, reach out to us. We also have got a webinar coming up for consumers. So that's our next webinar. It's on Thursday, April 16th. Same type of platform as you see here. Of course, it's going to be a completely different presentation. This one's going to be geared to the consumer and the homeowner, how reverse mortgages work, not only for their current homes, but also how they can use this product to buy a new home. So certainly let us know if you're interested. We'll send you the link, and you can share this with any of your clients. So, we want to help you turn more senior clients into buyers. That's really what we're here to do, is support you, add value, be a resource to you. if you don't have a reverse mortgage specialist lender, well, that's what we want to be for you. We don't want to get away with any other types of lender relationships that you have, but if you don't have someone like us, you need someone like us, and we like to be that person for you, that team for you. So, of course, age, what this product who it serves, significant equity, people who want to downsize, upside, relocate, and another purchase strategy or another sales strategy for your listings. So as I mentioned, reach out to your VIP mortgage loan officer. You can also visit us at vipreverse.com to get more information, get in touch with us. And next steps, I would say, is reach out, call us with questions. We're going to have a little time here. Let's see. Yeah, we've got a little bit of time for any questions. So if you've got questions, put them in the chat. We're going to get to those right now.
Are the windows cracked?
Wendy, do we have any questions out there?
We have a couple people who are interested in the agent guide, and we will make sure that those are delivered to you. Um, we will reach out to
Perfect.
your loan officer if we don't have your information, but I do see a couple people asking for that. I don't see any general questions.
Okay.
Um, I do
Perfect.
see, yep, yep, just a couple people that want to get more information about this. And so also we will talk to them. Someone has asked for information on this presentation, and we can get more information to you as well, Jeff.
Perfect. Perfect. Yes. So let's make sure we've got your contact information. I don't know if they put their email in the chat for anyone who wants an agent guide. You can throw that in there. Or again, just reach out to us. You got our site here, contact information. Well,
Yep. Yep. If you want any of you who have asked for information, Nick, Jeff, be sure that we do have your email information in the chat. That would be great. And then Samantha is asking for you could repeat that 55 place website that you were talking about.
yeah, absolutely. 55places.com. So you go there, it's going to show you the national map of the country, and then you can drill into any state, any city, and then it'll show you those specific communities in those areas. Great resource.
Excellent. No other questions at this point, but as Rick said, you can always reach out to vipreverse.com if you think of anything after the seminar ends. And we're just excited that you all took the time out of your schedule to join us today.
Yes, I can't thank everyone enough for taking the time today, and we're here for you. We appreciate the opportunity to support you, and we'll be here. We'll be standing by if we can help you. So thank you. Have a great rest of the day, and look out for more webinars and more information here from VIP Reverse.
All right. I'm going to go ahead and stop. We are good to go.
Nice.